The first question we need to answer is, what is a pip? Investopedia defines a pip as the smallest price move that a given exchange makes based on market convention. An example of this is when EUR/USD moves from 1.1699 to 1.1698, that is a 1 pip move. What is the value of 1 pip? Well, that depends. It depends on the lot size and the currency pair. Your lot size determines how much you're risking and what your reward will be. We'll be going over 3 examples where we risk the same amount of pips, but the lot size will be different in each example. Here we see a position size calculator. All the examples will be for EUR/USD with a $1,000 account size. For the first example, the risk will be 1% and the lot size is 0.1. In the second example, the risk is now 5% and the lot size has changed to 0.5. Lastly, we're risking 10% in this example. The lot size has now become 1 lot. This should show you that even though you're risking the same amount of pips, your lot size determines the actual risk. Next, we'll be looking at the currency pair. The size of a single pip is not the same on every pair. This is the size of 1 pip on the Euro/US chart. This is the size of 1 pip on the Great British Pound Japanese Yen chart. As you can see, the size is smaller than that on the EUR/USD chart. This is the size of 1 pip on the US dollar South African Rand chart, much larger than the 2 previous charts. When calculating your results, it's best to measure your gains in percentage instead of pips. If you're trading a small account, it may be discouraging if you're only making small gains every month. However, if your small account is making returns of 5 to 10% per month, those are good returns and there's no reason why you shouldn't be able to duplicate those results when your account has grown. If I make 100 pips, but my risk is 100 pips, with a 1% risk, I've only made 1%. However, if I make 50 pips, but my risk is 10 pips, with a 1% risk, I've made a 5% gain. In scenario 1, the green represents the reward and the red represents the risk. If the profit target is hit, the gain would be 100 pips, but only 1%. In scenario 2, if the profit target is hit, the gain would be 5%, even though the pip value is half that in scenario 1. The same trade was taken in both scenarios. More pips were made in scenario 1, but the overall gain was larger in scenario 2. Remember, knowing the amount of pips you're risking is important because you need that information in order to calculate your position size. However, recording your results in pips is unnecessary.